Good morning, investors, and welcome to your StockSense morning brief for Wednesday, November 19th, 2025. I'm Malik, and we're here to get you up to speed on everything you need to know from the Pakistan Stock Exchange. Yesterday was another challenging day for the KSE 100, and we have a lot to unpack, from shifting sector dynamics to crucial economic updates and institutional moves. Let's dive straight into the market summary. The KSE 100 index experienced a notable decline yesterday, closing down by about 750 points, or nearly 0.5%, to settle at around 160,900. This follows Monday's session, which saw the index drop by about 250 points, or 0.15%, closing at roughly 161,700. So we're seeing a continuation of the downward trend, with yesterday's drop being more pronounced. Trading activity also saw a decrease. The KSE 100 volume stood at around 300 million shares yesterday, down from over 520 million shares on Monday. However, overall market participation on the main board remained robust, with nearly 39 billion rupees worth of shares traded. Out of the active scrips, decliners significantly outnumbered advancers, with 249 stocks falling against 179 that managed to gain. Now, let's look at the sectors that made the most impact. Yesterday, two sectors notably pulled the market down. The automotive assembler sector had a significant negative impact, contributing to the overall market decline. Similarly, commercial banks also exerted considerable downward pressure on the index. On the flip side, the textile composite sector provided some minor positive support, but it wasn't enough to counteract the broader selling pressure. Turning to the technical picture, our daily analysis from TradingView suggests a mixed sentiment for the KSE 100. While some of the shorter-term moving averages are showing buy signals, many medium and longer-term indicators are signaling sell or neutral, indicating some underlying selling pressure. Looking at the pivot points, the classic pivot for the KSE 100 is positioned around 162,650. For today, investors might watch for immediate support around 155,300, while resistance could be encountered near the 190,000 mark. On the corporate front, there are a few important updates to note for today. Several companies are holding board meetings, including Treat Corporation Limited, First Treat Manufacturing Modaraba, and Shield Corporation Limited. These meetings are scheduled to consider matters other than financial results, so it's worth keeping an eye on any announcements that may follow. More critically, today, November 19th, marks the last day of entitlement for distributions for a few companies. If you're looking to be eligible for the announced dividends, bonuses, or rights, you need to purchase shares of BRR Guardian Limited for its 5% final dividend, Sioux Northern Gas Pipelines Limited for its 30% final dividend, and LSE Ventures Limited for its 10% final dividend. Today is your last chance to secure those entitlements. Moving on to broader economic and market news, we have a mixed bag of developments. On the challenging side, Pakistan's current account deficit widened significantly by over 255% in the first 4 months of the fiscal year, reaching $733 million. This surge, primarily driven by rising imports and stagnant exports, puts pressure on our foreign exchange reserves and the exchange rate. Compounding this, foreign direct investment also saw a substantial plunge of 26% during the same period, signaling a potential decrease in investor confidence. This macroeconomic data directly contributed to the negative sentiment observed in the stock market yesterday. Furthermore, there's concerning news regarding K Electric, with reports indicating the government is facing an arbitration threat from Saudi and Kuwaiti investors, which could lead to significant financial liabilities and uncertainty for the utility. However, it's not all headwinds. We've seen some positive developments as well. Vitol and Synergico have successfully executed Pakistan's biggest single delivery of marine fuel, a move that enhances Synergico's operational capabilities and positions Pakistan as a stronger hub for sustainable marine fuel solutions. In another positive step, Pakistan and Uzbekistan have decided to establish a joint body to boost pharmaceutical trade, addressing issues like slow certification of Pakistani medicines and aiming for a $2 billion bilateral trade target, which could open new avenues for our pharma companies. Also, Pakistan's exports to Europe have shown resilience, rising by over 5.5% in the first 4 months of the fiscal year, mainly driven by textile and clothing products, which is good news for our export-oriented industries. Additionally, Indus Motor Company has proposed a 40% tariff difference between completely knocked down and completely built unit vehicles for the upcoming auto policy, which could favor local assemblers. Let's quickly review the institutional flows from yesterday. Foreign investors were net sellers, offloading about $0.6 million from the market. This outflow was almost entirely absorbed by local institutions, who were net buyers by roughly the same amount. Delving deeper, we see some interesting trends. Mutual funds were significantly net sellers, offloading over $16 million. This selling pressure was largely offset by substantial buying from banks and DFIs, who injected over $10 million, and individual investors, who are net buyers of almost $4 million. Broker proprietary trading also saw some net selling, close to $1 million. So, while foreign and local flows balanced out, there was a clear shift in sentiment among different local institutional categories. My take for today is that the market continues to grapple with significant economic headwinds, particularly the widening current account deficit and the drop in foreign direct investment. These factors are creating a cautious environment, leading to profit-taking and volatility. However, it's important to recognize that beneath the surface, there are sector-specific opportunities and positive policy initiatives, such as the push for increased exports and efforts to boost pharmaceutical trade. Investors should remain vigilant, carefully monitoring economic indicators and corporate developments as the market navigates these mixed signals. That's all for your Stock Sense Morning Brief today. Thank you for tuning in. Don't forget to like, share, and subscribe to Stock Sense for your daily market updates. I'm Malik, and I'll be back tomorrow with more insights. Until then, trade smart.